Hare Krishna. Hello everyone. This is CA Rohan R. Pingle, practicing chartered accountant based in Mumbai, also partner in Motilal and Associates LLP, member firm of Marks Network. Today, this is a special session I'm conducting on changes and or updates in notified ITR, that is from ITR 1 to ITR 7 for financial year 24-25, assessment year 2025-26. So let me allow to share my screen. So already on Tax Guru YouTube channel, I have started 3 video series. One on what law says, that is covering 2 video series under that income tax and GST case laws based series, and third is GST relearn. And now this video is a special additional video I am making for recent ITR changes. Okay, so let's start with it. What we will going to learn in today's session. Let's have a look at history, purpose, and structure of the income tax return system in India, understanding the Finance Act and Finance Act number 2, 2024, major highlights relevant to ITR, CBDT's objectives for updating forms, and then ITR sequence wise 1, 2, 3, 4, 5, 6, 7 comparative table across ITR forms, the summary wise, filing workflow, we will understand, common mistakes that can be avoided, case studies, final tips, and conclusion. So this we will going to cover in today's session. Let's start. Before diving into the technical aspect, it is important, always important to understand the history, purpose, and structure of the income tax return system in India. What is the purpose of ITR filing? ITR filing is the declaration made by taxpayers to the income tax department regarding their income and tax obligation for a financial year. It enables the government to assess whether the correct amount of tax has been paid and to issue refunds if there has been any excess tax payment. Timely filing avoids penalties, ensure compliance, and supports future needs like visa applications, loan sanctions, and subsidy eligibility. Means filed income tax returns are required documents to these authorities. Whenever we go for a visa applications, we need to file, we need to submit copies of income tax returns. So it is important for that. So that is the purpose of ITR filing. Why multiple ITR forms? Okay, let's understand why there are ITR 1, 2, 3, 4, 5, 6, 7. Different taxpayers have different sources of income like salary, rent, capital gains, business income, foreign income, dividends, etc. Separate ITR forms exist to capture income types accurately, enable proper deductions, and allow relevant schedules to be filed. For example, a salaried individual with only interest income may use ITR 1 form. Okay? A freelancer or a professional must use ITR 3 or ITR 4, and trust uses ITR 7 and ITR 6 for companies. Let's see historical development. Initially, there were only couple of forms and schedules which required detailed manual entries. Over time, the forms evolved with automation. Online filing utilities, means online filing utilities started from the year 2007, financial year 2007-8. and dynamic form rules depending on the taxpayer's profile. E-filing was introduced in, that's it, 2006 and became mandatory for certain classes soon after. Let's move on. Annual updates to ITR forms. Each year, forms are revised to reflect, right? Once they notified, once the department notifies the ITR, then the filing process begins. So each year, the forms are revised to reflect amendments brought in by the Finance Act. New sections, that is example for sections 115 BAC, optional tax regime. Technological improvements, that is pre-filled forms, validation rules, enhanced TDS or TCS reporting, and income matching from AIs or TIs. AI started from last 2 years. So these are the few of the reasons why the annual updates are going to ITR. Let's understand policy and budget background for changes. This section covers why the ITR forms are updated for financial year 24-25 and the broader policy environment driving these changes. Understanding the Finance Act. What is meant by Finance Act? The Finance Act is an annual legislation passed by Parliament during the Union budget to bring into effect the financial proposals of the government. It typically amends the Income Tax Act, Customs Act, and other tax laws. Once approved by both houses of parliament and signed by the president, it becomes law for the relevant financial year. Let's understand Finance Act number 2, 2024, major highlights relevant to ITR. LTCG limit revised. This time, the exemption threshold under section 112A was increased from rupees 1 lakh to rupees 1.25 lakh. What is the major changes major highlights we are going to see? So under the LTCG limit was increased from rupees 1 lakh to rupees 1.25 lakh. Please make the notes, okay, so that it will be easy to file correct ITR, and whatever queries or questions still you remain after this lecture, you can put it into the message on below the video, or you can text me to my email ID also. Okay. So the exemption threshold under section, at the end of the session, I will I will text you my email ID. Okay. So don't worry about that. Now focus on today's session. The exemption threshold under section 112A was increased from rupees 1 lakh to rupees 1.25 lakh. What this affects ITR form eligibility, especially ITR 1 and ITR 4, which now permit reporting of LTCG up to rupees 1.25 lakh. Okay. This change affects ITR form eligibility, especially ITR 1 and ITR 4, which now permit reporting of LTCG up to rupees 1.25 lakh. New tax regime becomes default. Okay, from financial year 24-25, new tax regime becomes default, and if you are want to avail old regime, then you have to file form before filing your ITR return, before filing or before the due date. So new tax regime becomes default from financial year 24-25. The new regime under section 115 BAC is the default. Taxpayer need to file form 10IEA if choose to opt out and follow the old regime. Okay, understood? Taxpayer need to file what? Form 10IEA if they choose to opt out from the new regime and follow the old regime. Another major highlights TDS expansion and compliance. New TDS sections like 194R, that is benefits. It deals with the benefits. One section 194 is crypto and 194B, that is lottery winnings, now require mandatory disclosures. Please keep in this point. New tedious sections like 194 are benefits, 194 is crypto, and 194B lottery winnings now require mandatory disclosures. E-filing utility now includes validation checks for these tedious sections. Be careful. Asset and liability disclosure. Individuals and HUFs are now required to disclose assets if total income exceeds rupees 50 lakhs and liabilities if exceeds rupees 1 crore. This is a bifurcation they have made. What individuals and HUFs are now required to disclose assets if total income exceeds rupees 50 lakhs and liabilities if assets exceed rupees 1 crore. Disclose assets if total income exceeds 50 lakhs and liabilities if assets exceed rupees 1 crore. This improves tracking of high net worth taxpayers and supports anti-tax evasion mechanism. Means reason behind making this amendment is to improve tracking of high net worth taxpayers. Okay. Now we will see CBDT's objectives for updating the forms. Okay. What are the CBDT's objectives for updating the form? Streamline compliance across taxpayers categories, align reporting formats with AIS and TIS system, make returns easier to validate, process, and assess. Yes, from last 2 years, the processing speed of the returns are very much at higher side. They are processed within a span of 1 or 2 days after filing the returns. So it is very good for individuals. It is very good for the Indian public, those who are filing the income tax returns. Make returns easier to validate, process, and assess. Enable better data analytics and faster refund processing. Very much refund are credited within a day or two also from the date of filing the return. In this last 2 years, we are experiencing this type of speed in processing the returns. It is really, really good. These background elements are critical to understand why the 2024-25 ITR forms have evolved in both design and content. And that is why the department also extend the due date from regular filing, that is 31st July, to uh, 15th or 30th September. That is why they are already extend before it in the announce it in only June only. So these are the major changes taken place in financial year 24-25. So they require time to update the schema of the returns also. So now we will move on to ITR wise, what changes have made in 2024-25. So let's begin with ITR 1, that is Sahas. Applicability. To whom ITR 1 is applicable. ITR 1 is used by resident individuals, not applicable to non-resident. ITR 1 is used by resident individuals, also not HUFs, with total income up to rupees 50 lakhs. If your income cross these limits, you unable to file, you are not supposed to file ITR 1. So these are the factors one required to understand before filing his or her ITR return. So ITR 1 is used by resident individuals, not HUF, with a total income up to rupees 50 lakhs. Sources of income can include salary or pension, income from one house property, not on a loss carry forward basis. That is, if you have a loss brought forward from earlier under income from house property, then also you cannot file ITR 1. So income from one house property, salary or pension, income from other sources excluding lottery resources, and long-term capital gain from equity-oriented funds or shares, and that is also up to rupees 1.25 lakh. Once your capital gain exceeds rupees 1.5 lakhs, then also you cannot file ITR 1. So note down these points or you take screenshot for your further use. ITR 1 is used by resident individuals with total income of rupees 50 lakhs. Sources of income include salary or pension, income from one house property, income from other sources other than lottery resources, long-term capital gains from equity-oriented mutual funds or shares up to rupees 1.25 lakhs. Let's see what are the exclusions from ITR 1. ITR 1 cannot be used if you are a director in a company, you hold unlisted equity shares, you have capital gains exceeding rupees 1.25 lakh, you have more than one house property, you have foreign assets or foreign income, agriculture income exceeds rupees 5,000, you have income under profits and gains of business or profession. So these are the exclusions. Means if you are covered under any of it, this condition, then you cannot file ITR once. What are they? If you are a director in a company, if you hold unlisted equity shares, if you have capital gains excluding rupees exceeding rupees 1.25 lakhs, if you have more than one house property, if you have foreign assets or foreign income, agriculture income exceeds rupees 5,000, and if you have income of profits and gains of profession from business or profession. So let's see what's new in assessment year 2025-26 related to ITR 1. That is LTCG up to rupees 1.25 lakh can now be reported under section 112A. Previously, it was restricted. Mandatory reporting of TDS under correct section codes. Example, section 194A for bank interest, section 194B for lottery, section 194S for digital assets. Aadhaar enrollment ID field has been removed. This is also important. Aadhaar enrollment ID field has been removed and Aadhaar number now compulsory. But for non-resident, it is not mandated. So for resident, Aadhaar number, for resident individual, Aadhaar number is compulsory now. They have to put it. Income from buyback post October 1, 2024 must not be reported as capital gain, but as income from other sources. Income from buyback post October 1, 2024 must not be reported as capital gain, but as income from other sources. Let's see key schedules in ITR 1. ITR 1 comprises Part A, general information, Part B, gross total income, Schedule TDS and tax payments, Schedule DI, investment details for claiming deductions if applicable. Let's see example scenario. Mr. Kumar is a salaried employee earning rupees 10 lakh annually. He has 70,000 interest income from FDs, and earned rupees 1 lakh as LTCG from equity mutual funds. As the LTCG is within 1.25 lakh and other incomes are eligible, he can file ITR 1. Okay. If this LTCG was more than 1.25 lakh, then he cannot be able to file ITR 1. Let's have these tips. Cross-check TDS figures with Form 26AS and also AIS. Cross-check TDS figures with Form 26AS and particularly AIS, Annual Information System. Annual Information Statement. Sorry for the Let's check. Validate ISIN codes, and LTCG calculation for equity mutual fund sales. Very important. And you have to, while filling capital gain schedule, you have to fill or validate ISIN code. Ensure consistency in bank account details for refund processing. Very much important. Means we add bank account, but most of the times what happened is that on income tax portal, that the bank account is not validated for some reason, maybe IFSC code or branch code, maybe for another reason. So you have to check before putting any bank account for income tax refund. If you have a refund, please go log into the income tax portal and check whether that bank account shows it is validated. Okay, that is most and eligible for refund. Most important. So these are the tips related to ITR 1. So now we are moving to ITR 2. Let's see applicability. ITR 2 is used by individuals and HUF because HUFs cannot file ITR 1. So ITR 2 is used by individual as well as HUFs who have income from sources other than business or profession. Means if you have a business or profession income, then you also not cannot file ITR 1, also cannot file ITR 2. For them, it is ITR 3, 4. Okay. So ITR 2 is used by individual and HUFs who have income from sources other than business or profession. Specifically suitable for taxpayers with capital gains, short term and or long term, more than also 1.25 lakhs, income from more than one house property, foreign income or foreign assets. Means whatever exclusions for ITR 1 are inclusion for ITR 2. Remember this. First is capital gains, short term and long term, income from more than one house property, foreign income or foreign assets, agriculture income exceeding 5,000, income from lottery, resources or other casual income, being a director in a company or holding unlisted equity shares, assets and liabilities exceeding rupees 1 crore. These are the exclusions for ITR 1 and these are the, we can say, inclusions for ITR 2. Means those who have this type of or fulfill this condition can file ITR 2. Let's see exclusion for ITR 2. ITR 2 cannot be used by individuals with business or professional income. Means those who have business or professional income can file ITR 3, 4, whatever applicable, right? Such taxpayer must file ITR 3. What will be the capital gain disclosure under ITR 2? Must include detailed transaction-wise reporting. Must include detailed transaction-wise reporting. Okay, ISIN code for listed securities, date of acquisition and date of sale, cost of acquisition, indexation details if applicable, fair market value as on Jan 31, 2018 if applicable, sale consideration, brokerage and net gain. Means you have to put all this information transaction wise in capital gain schedule under ITR 2. So you need to keep all these records ready. And this you can because most of the mutual fund houses or those are dealing in this, they provide you the profit and loss account or capital gain statements in April only for your last financial year. So check your email ID. Means they email you on your registered email ID. Okay, so there is you will not have any difficulty to get these details, and also you can also download it from your mutual fund login, whatever account you have. Special requirement for assessment year 25-26. What is it? LTCG bifurcation before and after July 23, 2024 due to revised exemption threshold. very much important change in assessment year 2025-26. Those who are filing ITR 2 and related to LTCG bifurcation required. That is, this is the special requirement. Earlier, this requirement is not, but it is happened in between that we in the year 2024, and that is this need to be disclosed in this way. So before LTCG bifurcation, before 31st July 2024, sorry, 23rd July 2024, and LTCG after July 23, 2024 due to revised exemption threshold. What are the foreign asset disclosure, that is schedule FA in ITR 2, required for ordinary resident taxpayers, includes foreign bank accounts, financial interest in foreign entities, foreign stocks or mutual funds, immovable property situated outside India. Means those who are resident individuals and also having this foreign assets, then they have to disclose all these details in schedule FA. What are they? Foreign bank accounts, financial interest in foreign entities, like example RSUs, SOPs, foreign stocks or mutual funds if you are holding that, immovable property situated outside India. So these are the related to foreign assets if you are holding it in financial year 24-25. What's new in assessment year 2025-26? LTCG up to rupees 1.25 lakh exempt under section 112A. Buyback reporting changed post October 1, 2024. Nil gain under capital gains, full value under other sources. Revised asset disclosure threshold is rupees 1 crore. Sorry, enhanced TDS or TCS mapping with section-wise tagging. Let's see example scenario. Ms. Radhika earns rupees 22 lakh as a salary, owns two flats. Owns two flats means two in-house properties. One self-occupied, one let out. That is not concerned. She owns two flats, okay, and earn rupees 3 lakh as LTCG. That is more than rupees 1.25 lakh from equity. She also hold RSUs in US company. She must file ITR 2 for capital gains, reporting both properties, schedule FA for RSUs. Understood? Let's see key schedules in ITR 2. Schedule CG, that is capital gains. Schedule FA, that is foreign assets. Schedule HP, house property. Schedule TDS, DI, part B of total TI and TTI. Let's see the tips. Use broker provided capital gain statements only. I have just told you that how you can read that statements. Okay. So use broker provided capital gain statements only because they provide it in the format which you have to report in your ITR. Reconcile schedule CG, that is capital gain, with AIS and Form 26A is very much important. Reconcile, you have to reconcile schedule capital gain with AIS and Form 26AS. One of thing I want to share is that I have experienced that in AIS, what is happen is that, or I think in TI's statement, the capital gain, the sale figure of whatever of your shares or mutual fund units, they are picking up exact double. Means if you have a 10 lakhs of sale figure, TIs will show you 20 lakhs. So please keep that check. Don't get tense out or stress out. I have only 10 lakhs or 10 lakh 20 and how they are showing 20. So just see exact, you will find the double figure. So that is, I think, one from the TDS or from 26AS, maybe it will be picking up, or maybe they are picking from the mutual fund house. and another from the another reporting entity. So it will get doubled up. So don't worry about it. Then just keep calm and just see whether it is exactly doubled up. Okay. So I'm sure that because I have experience from last 2 years when there is AS and TS came in place. So ensure compliance for foreign assets to avoid penalties. These are the tips. What use broker provided capital gain statements only. Reconcile scheduled capital gain with AIS and Form 26As. Ensure compliance for foreign assets to avoid penalties. Let's move on to ITR 3 for individuals and HUFs having business or professional income. ITR 1 applicable to individual, HUF can file ITR 2. But in both, we cannot, if you have a business or professional income, then you cannot file ITR 1 or ITR 2. You have to move to ITR 3. So ITR 3 is for individuals and HUF having business or professional income. Let's see applicability. ITR 3 is applicable to individuals and HUFs who have income from proprietary business or profession. It is also used when income arises from speculative business, derivatives, intraday trading, or virtual digital assets, that is cryptocurrency. These are the things. If you have covered in any of it, you have to file ITR 3 and you become or you are the individual or HUF. Who should file ITR 3? Proprietors, okay, running business or profession under their PAN. Professional like doctors, CAs, lawyers, engineers. Freelancers also in IT, content writing, consultancy, design, etc. Traders in stock markets involved in intraday or futures and options can also file ITR 3. Traders in stock markets involved in intraday or futures and options, FNO. Taxpayer with speculative income, horse racing, cryptocurrency trading, they can also file ITR 3. And individuals switching out presumptive taxation 44AD or 44ADA also can file ITR 3. Sorry, individuals switching out of presumptive taxations, that is section 44AD, 44ADA, are need to file ITR 3. Let's see comprehensive income reporting. Business income must be shown in detailed schedules. Gross receipts from each business, gross receipts from each business segment. Expenses under heads like salaries, rent, electricity, depreciation, balance sheet reporting, fixed assets, receivables, cash balance are also required to be disclosed. Professional income uses a simplified format but also includes disclosures like gross receipts, business code, expenses, etc. Capital gains and other income. Similar to ITR 2, ITR 3 also requires a detailed LTCG and STCG requires. As ITR 3 also mandate the detailed LTCG and STCG disclosures. Income from house property and other sources must be reported in full. Interest income, dividends, and winnings must specify TDS sections. And what are the new in ITR 3 for assessment year 2025-26? Split LTCG columns, that is before and after July 23, 2024. Okay, due to the exemption. Buyback proceeds. Nil under capital gains, full value under other sources for post October 1, 2024 events. Nil under capital gains, but full value under other sources for post October 1, 2024 events. Virtual digital assets, VDA schedule. Report each transaction in cryptocurrency, NFT, etc., including purchase, sale date, value in INR, cost and TDS under section 194S. Tax regime section. Declare if opting out of new regime using Form 10 IEA. Tax regime section. Okay, tax regime selection is also important. Virtual digital asset. Report each transaction in cryptocurrency, including purchase, sale date, value in INR, cost, and TDS under section 194S. And tax regime selection. Declare if opting out of new regime using Form 10 IEA. Is everyone who want to file their ITR return under old regime of taxation, they need to opt out using and filing this Form 10 IEA before filing their ITR return. Please keep this in mind. Audit requirements, section 44AB. Okay. If business turnover is more than rupees 1 crore or rupees 10 crore with 95% digital receipts, if professional receipts more than rupees 50 lakhs, if claiming income lower than presumptive rate under section 44 AD/ADA, and then total income exceeds exemption limit, then the audit is required. So the section 44 AB requirements are: if business turnover more than rupees 1 crore or rupees 10 crore with 95% digital receipt. Means if you have 95% digital receipt, then the limit is 10 crore. If you are not, then the limit is 1 crore. If professional receipts more than rupees 50 lakhs, then audit is required. And if you claiming income lower than presumptive rate under 44 AD or ADA and total income exceeds the exemption limits, then audit is required. Let's see illustrative example. A software freelancer earned rupees 48 lakh from clients, rupees 4 lakh in FD interest, and rupees 60,000 in crypto gains. He must file ITR 3. Why? As professional receipts plus expenses, interest income under other sources, crypto trades under VDA schedule. Importance of ITR 3. Let's see. Enables accurate compliance for growing gig economy and consulting professionals. Captures audit applicability, very much important. Captures what? Audit applicability and business compliance requirements. Helps avoid notices due to incomplete reporting of crypto and trading incomes. Let's see tips under this ITR 3. Use updated P&L formats for professional receipts. Maintain separate ledger for crypto or stock trades. Ensure all 26 years entries are reflected properly. So these are the tips with related to ITR 3. Now we are moving to ITR 4, that is Sugam. Hope till this you have understood whatever we have learned, that is ITR 1, ITR 2, ITR 3, applicability plus inclusions plus exclusions. Okay. Now we are moving to ITR 4, Sugam. Applicability. ITR 4 is used by individuals, HUFs, and firms other than LLPs. Means firms can also use ITR 4 with individuals and HUFs, but firms other than LLPs are having total income up to rupees 50 lakhs and opting presumptive taxation under section 44 AD for small business, 44 ADA for professionals, 44 AE for vehicle owners with less than equal to 10 vehicles. Means ITR 4 is saying Sugam, and for whom? Those individuals, HUFs and firms other than LLP having total income up to rupees 50 lakhs and opting. These are the cumulative conditions and is there. This 50 lakhs income, total income up to rupees 50 lakhs and opting for presumptive taxation under section 44 AD, 44 ADA and 44 AE. So that is for small businesses, professionals and vehicle owners with less than equal to 10 vehicles respectively. Let's see presumptive scheme basics, section 44 AD. what 4480 talks about under the Tax Act. Dim profit, that is 8% of turnover. Dim profit, directly you can put 8% of the turnover, or 6% if digital receipts. Means if you are digitally everything, your all the payments to receive digitally, then you can claim only 6% of your 6% as your to deemed profit. Turnover limit is rupees 3 crore if 95% transactions are digital. Means if you have a 95% of your transactions are in digital format, then your turnover limit is 3 crore and not 1 or 2 crore, right? So that is the limit also for 3 crore in case you have 95% transactions are in digital. Let's see section 44 ADE. Dim profit for these are 44 ADA for whom? Professionals. 50% of gross receipts. Therefore, here word is gross receipts. Dim profit. 50% of, okay. And limit is rupees 75 lakh gross receipts. 44 AE. Fixed presumptive income per month per vehicle. 44 AE talks about fixed presumptive income, and that is also per month per vehicle. Let's see advantages. No need to maintain books of accounts. Okay, that is the main that ITR 4, why it is a Sugam. You don't have to maintain the accounts. Okay, no requirement of audit unless conditions violated, and simpler compliance and reporting. These are the advantages. Okay, no need to maintain books of accounts, no requirement of audit unless conditions. These are the advantages of that section 44, filing under section 44 AD, ADA or 44 A. You don't have to requirement of audit unless you have violated the condition. Simple compliance and reporting. Now we will see ineligibility for ITR 4. Means those who cannot file ITR 4 when income from capital gains above rupees 1.25 lakhs, then you cannot file ITR 4. More than one house property, foreign assets or foreign income, director in a company or investment in unlisted shares, income from crypto, lottery, house racing, other sources. Means if you have covered any of this, then you cannot file ITR 4. What are they? Capital gains above 1.25 lakh, more than one house property, foreign assets or foreign income, director in, if you are a director in a company or investment in unlisted shares, income from crypto, lotteries, horse racing, or other speculative sources, then you cannot file ITR 4. What's new in assessment year 2025-26? This is, we have already seen, that is LTCG up to rupees 1.25 lakhs now permitted. Revised validation logic blocks use if income from VDS or speculative activity. VDS is virtual digital assets. Mandatory mention of TDS section codes 194A, 194S. Mandatory reference to Form 10IE for tax regime opt-out. Means you have to file Form 10IE if you want to avail or file your return under old regime, and that is also before you file your IT return. Means your IT return, you have to put that acknowledgement number of submitted Form 10IE and date also. Key schedules under ITR 4 Sugam. Schedule BP, that is presumptive income, Schedule TDS and tax payment, Schedule DI, deductions, claim. Let's see example. Mr. Shah owns what? Kirana shop with turnover of rupees 1.8 crore, less than 3 crore. All digital, more than 95%. He opts for section 44 AD and reports 6% of deemed profits. Why 6%? Why not 8%? Because their receipts are all digital, more than 95%. What 6% of deemed profit is? 10.8 lakhs. He has rupees 30,000 interest income, so he can file ITR 4. Tips. Declare turnover honestly. Mismatch with AI's triggers scrutiny. We keep in this. Who are you, in which ITR you are filing. You need to check Form 26As and particularly AIS. Whatever is disclosed or whatever is reflected in AIS, you have to check whether that is all covered or disclosed in your income tax return. to avoid your future scrutiny, okay, or errors. Use Form 26A to verify TDS details. Retain receipts even if audit not mandatory. So even if you are not liable to audit, then even retain the receipts for your record and information. Now we are moving to ITR 5, ITR 6, and ITR 7. Let's start with ITR 5. Whom ITR 5 is applicable? From firms, LLPs, AOPs, BON, AGPs. What is stand for AGPs? Artificial Juridical Person. BOS stands for Body of Individuals. AOP stands for Association of Persons. Let's see its applicability. We are talking about ITR 5. Applicable to firms except those filing ITR 7. Means those firm who need to file ITR 7, then they cannot file ITR 5. Applicable to LLPs, Association of Persons, Body of Individuals, and Artificial Juridical Persons. Okay, and excludes companies and individuals or HUs because individual and HUs are filing in ITR 1, 2. Okay, and companies are filing ITR 6. So ITR 5 is for particularly for firms, LLPs, AOPs, BOS, and AGPs. What are the key disclosures under ITR 5? Balance sheet, profit and loss account, schedule I, that is partners or members information. Means disclosure or balance sheet P&L is mandatory. Schedule IF, that is partners or members info. Schedule TDS, TCS, TPM, that is depreciation, DI, deductions, and CG, that is capital gains. Okay, let's move on to ITR 6 for companies except Section 11 exempt. Section 11 is related to trust. Okay, ITR 6 for companies applicable to domestic companies not claiming exemption under Section 11. If they are claiming under Section exemption under Section 11, they cannot file ITR 6. Yeah, I think I have to file ITR 7 in that case. Mandatory e-filing with digital signature. Yes, ITR 6 cannot be verified by your directors or whoever the key persons, Aadhaar, OTP, or so. They need to verify it or e-file with digital signature only of authorized person. Must include financials, depreciation, TDS or TCS foreign holdings, MAT calculations, that is minimum alternate tax, dividend distribution details. So these are ITR 6 related regulations that is applicable to domestic companies not claiming exemption under 11. Mandatory, no specific changes. Okay. Mandatory e-filing with digital signature. Must include financials, depreciation, TDS or TCS for holdings, MAT calculation, dividend distribution details. Let's move on to ITR 7. ITR 7 applicable for trust, societies, political parties, and institutions. Understood now? Okay. ITR 5 is applicable to firms, LLPs. And ITR 6 applicable to companies. ITR 7 is applicable for trust, societies, political parties, institutions. Applicable to charitable or religious trusts, political parties, applicable to scientific or educational institutions, and applicable to others claiming exemption under Section 11, 12, 30. Disclosures required. What are the disclosures required under ITR 7? Schedule ER, revenue expenditure. Schedule EC, corpus donations. Schedule AI, accumulative income. And details of involuntary contributions and utilization. These are the disclosures required for ITR 7. Schedule ER, revenue expenditure. Schedule EC, corpus donation. Schedule AI, cumulative income, details of voluntary contributions and utilization. Let's see changes for assessment year 2025-26 for ITR. Capital gains split. Yes, we knew this before and after July 23, 2024. Buyback income treatment nil under capital gain. Full value in other sources. Enhanced asset or liability thresholds. TDS reporting now mandates section wise tagging. Let's see examples of ITR 5, ITR 6, and ITR 7. First, ITR 5. LLP with rupees 3 crore turnover from consultancy. ITR 6, private limited company with rupees 10 crore turnover and MAG applicable. ITR 7, educational trust claiming exemption on rupees 2 lakh. Educational trust claiming exemption on rupees 2 crore donation income. Tips. What are the tips? Ensure tax audit reports, if applicable, are uploaded before filing. What we need to ensure is that tax audit report, if applicable, are uploaded before filing, and then we need to file income tax return. So very much important. Lapses are there happening. Uh, Lapses are still happening. Report foreign grants or assets with Schedule FA. What we need to report is report foreign grants or assets with Schedule FA. Use proper documentation for exemption claims. And now we will see summary, filing workflow, real world class, and tips. We are now moving to our end of the sessions. This is the comparative table across ITR form. If you see the heading in feature, we have said the some of the pointers, and here the 4 column headings giving you ITR 1 and 4, ITR 2, ITR 3, ITR 5, 6, 7. So let's see what is this summary is all about. Income limit. Up to rupees 5, up to rupees 50 lakhs, we can file ITR 1 for once it is crossed. Even if you have one house property or versus income, you need to go for ITR 2. So for ITR 2, 3, 5, 6, 7, no limit. Income limit is not there for ITR 2, 3, 5, 6, 7. Only it is applicable to 1 and 4, and that is income up to 50 lakhs can only file ITR 1, 4 because they are not in detail. ITR 2, 3, 5, 6, 7 are in completed detail. So that is why that threshold limit is kept it. Business or professional income. ITR 4 only for presumptive income. ITR 2 is not allowed for those individual HUFs having professional or business income. And therefore, if you have a business or professional income, ITR 3 required or ITR 5, 6, 7, whatever it may be. Capital gains allowed in case of ITR 1, 4 filers up to rupees 1.25 lakh only. If it exceeds, then full disclosure with ITR 2, 3, 5, 6, 7. Foreign assets or income, ITR 1 and 4 is not allowed. Required if resident, ITR 2, ITR 3 can file foreign assets income if you are a resident. Asset foreign assets, right? Asset disclosure threshold. Rupees 50 lakhs in case of ITR 1, 4, 1 crore for ITR 2, ITR 3, and 1 crore or entry specific for ITR 5, 6, 7. Regime declaration, new, old, mandatory Form 10 IEA if old regime in case of those who are filing ITR 1 and 4. And in case of ITR 2, ITR 3, it is mandatory. Mandatory if applicable in case of ITR 7. Buyback income reporting. Buyback income reporting. Not applicable to ITR 1 and 4. In ITR 2, ITR 3, and ITR 5, 6, 7, you have to report it in other sources. And Aadhaar enrollment field is removed from all of the forms. And what is they have mandatory is that Aadhaar number for resident. So we can let's see now filing workflow. So it will be very easy to you to file your income tax return in coming days. So what will be the filing workflow? You have to first gather your documents. What are they? Form 16 or 16A also. Form 26AS, AIS particularly, and TIS, capital gain statements from the brokers, because broker statements only resolve or solve your purpose. Deduction proofs. Then select appropriate form as whatever applicable to based on income type, capital gains, foreign income. You have to select the appropriate form. Then choose tax regime. If you want to go with new regime, is default only. If you have to go with or opt out from new regime and go for old, then you have to file form or submit form 10IEA. Use utility. Extend JSON tools with pre-filled data. Input and validate. Full schedules carefully cross-check with 26 AS and AIS. Very important. You need to cross-verify and keep your reconciliation ready while comparing 26 AS and AIS with your current. E-Verify, use Aadhaar OTP, net banking, or other methods. Means those are the days are gone, but still they have kept that you have to sign if you are not able to link your Aadhaar card and other number, then you can't E-Verify if you are not having net banking, or the senior citizens who are not able to access this technology, they can file it physically and then they have to sign it, that acknowledgement and speed post to the CPC before. But within a fraction of second, you can e-verify it if you have a Aadhaar OTP linked with your PAN card or whatever. So use Aadhaar OTP, net banking or other methods to e-verify your return. Very much easy to get your returns filed within a fraction of second. Now we will see what common mistakes that can be avoided. Choosing incorrect ITR form means many number of people may choose incorrect ITR form. Okay, and due to that, they may face assessment or scrutiny of the returns. Ignoring foreign assets reporting. Many of them are just ignore or let it be that whatever your foreign asset, whatever your foreign income in terms of rupees. Please, if you have anything, report it. Don't avoid it to report. Means if you are only salary income, one house property, but you have also with it foreign asset or foreign income, then you see it is not much material. If you I exclude that foreign asset disclosure or foreign income, then I will can file immediately ITR one or four, whatever it may be. But don't do that. Please select appropriate ITR form based on the conditions we have discussed till time. Okay. So if you want to avoid future mismatch or future assessments from the department, then you have to choose your form before the filing very carefully, and very correct form you need to choose. So this common mistake, mismatch between 26 days and return. We in a hurry, we just go and file the ITR. Okay. Because that mismatch also is maybe in 26 days you have a 10,000 credit and but you are claiming 12,000. Then of course in 26 days it's not updated till the processing of your income tax return. Then the income tax department will you refund of only rupees 10,000, but not 12,000. So that is very much important. Not opting out of new regime on time. That is also more important. Means many of the means what is the concept is that if you want to opt out from the new regime, you have to file an IEF form before the filing of income tax return or before the due date, whichever is earlier. Okay, so if you're not able to opt that option within the given time, then you cannot go for the old regime, and then you have to compulsory or mandatorily need to file that ITR under old regime. Let's see a small case study. Salaried person plus mutual fund LTCG less than 1.25 lakhs, then applicable form is ITR 1. Freelancer plus crypto income, then applicable ITR is ITR 3. Small retailer understand 44 AD, then ITR 4, that is called sugar. And trust receiving donations, ITR 7. Let's move on to the final tips and conclusions. Before that, hope you have understood all these type of ITR changes and updates, and you are learning. I'm very much from my bottom of the heart is thinking that you are learning some good things from this video series which I am bringing to you from this Tax Guru platform. This is a special session on based on ITR because we need to file ITR and there are lots of recent changes and updates. So I thought this is a very much important and a good time to share my knowledge or experience with you regarding this ITR. And this is the time, and because the due date also now extended, so we are not in a hurry. So we have ample time to gather our documents, whatever requirements, and can proper have a proper time to disclose whatever you want to disclose it correctly and choose correct ITR form. Can't say for this year that the due date was coming and we are not get efficient enough time to do whatever we want to do. So to this time, we have an ample time. So don't wait until the last date. Okay. So final tips like that: file early to avoid interest and processing delays. Reconcile with 26S, particularly AIS. Written documentation for at least 6 years. Okay, if your returns are processing, but at least for 1 year, you have to keep it for the 6 years. Till that time, you keep your documents with you. Use digital utilities to prevent validation errors. Very much important. Use these digital utilities. And what conclusion we can draw from today's session is that proper ITR selection and accurate reporting not only fulfill statutory obligations but also streamline the refund processing and reduce scrutiny risk. In the department also they can able to process your ITR return very fast and provide you your IT refund within a very short span of time. So that is more important for us. That our next conclusion is with significant policy driven changes in financial year 24-25, especially the default shift to the new tax regime and stricter reporting requirements, taxpayer must stay informed and proactive. And this, we can say this is the special reason I am making this video for all of you. Filing timely and correctly ensures what? Seamless compliance and financial transparency in a digitally tax ecosystem. So that's that's it for today. Hope you have learned many things from this session and you will be benefited in your ITR filing. So enjoy ITR filing. Happy filing. See you soon. Hare Krishna.